The war didn't start with tanks. There was no siren, no declaration. It started quietly, with spreadsheets, with bond auctions, with interest rates moving 0.25%. And most people never noticed, because today, the most powerful weapon on Earth isn't a missile, it's debt. Not personal debt, not your credit card, sovereign debt, corporate debt, the kind that decides whether countries bend, break, or behave. And right now, it's being used every day. Here's why this matters now. Over the last 40 years, the global economy built itself on borrowing. Governments borrowed to grow, companies borrowed to expand, households borrowed to survive. Debt stopped being a tool, it became the system. Global debt is now over $300 trillion. That's more than 3 times global GDP. And that number alone doesn't tell you the real story, because the power isn't in who owes the debt, it's in who controls the conditions. Let's rewind. Debt, in theory, is simple. You borrow money, you promise to pay it back with interest. End of story. But modern debt markets don't work like a handshake. They're layered, abstract, and deeply political. When a government issues debt, it sells bonds. Those bonds are bought by banks, pension funds, insurance companies, central banks, and foreign governments. And once that debt exists, it doesn't just sit there. It trades. It's used as collateral. It backs other loans. It props up entire financial systems. So debt stops being a promise. It becomes leverage. Here's where it turns into a weapon. Every borrower depends on refinancing. Old debt is paid with new debt. That's normal now, which means access to markets is everything. Lose that access, and the game is over. If investors lose confidence, interest rates spike, borrowing costs explode.
Budgets collapse. No invasion required. We've seen this movie before. In the Eurozone crisis, countries didn't fall because they ran out of money. They fell because bond markets decided they were risky. Greece didn't lose a war, it lost confidence. And once yields surged, austerity followed. Public services cut, wages slashed, political sovereignty quietly reduced. All without a single foreign soldier. This is how debt enforces discipline. But it gets more uncomfortable, because debt isn't just about markets reacting, it's about influence being applied. Credit rating agencies downgrade, investors pull back, currencies weaken. Suddenly, policy options shrink. You can't stimulate, you can't spend, you can't resist, because debt holders are watching. Now zoom out. This doesn't just happen to weak countries, it happens to companies, to cities, even to entire industries. Highly leveraged companies don't need to be told what to do. They already know. They cut costs, delay investment, avoid risk, not because it's smart, but because debt demands obedience. And here's the irony. The content-type version of debt says markets are neutral, that interest rates are just prices, that capital flows to where it's most productive. The reality is messier. Debt rewards stability over innovation, compliance over experimentation, predictability over resilience. It favors those already powerful because the safest borrower gets the cheapest money. Now let's talk about geopolitics. When countries hold each other's debt, they're tied together. In theory, that creates peace. In reality, it creates pressure points. Sanctions don't work by force. They work by freezing assets, blocking refinancing, cutting off payment systems. Debt makes those tools devastating.
You don't need to bomb infrastructure if you can bankrupt it. And the most effective threats are never spoken. Markets anticipate. Investors react. Capital flees preemptively. Fear does the work. That's why debt is such a clean weapon. No headlines, no accountability, no clear villain, just outcomes. Higher unemployment, lower growth, political instability. And everyone shrugs and says, The markets decided. Now here's the part most people miss. The system only works as long as debt is believed to be safe. Government bonds are treated as risk-free. They're the foundation of modern finance. But risk-free is a story we tell ourselves. And every weapon depends on trust. If that trust cracks, debt doesn't discipline, it detonates. Because the same leverage that enforces obedience can amplify panic. Rates spike too fast, liquidity disappears, collateral loses value. Suddenly, no one's in control.
That's the quiet standoff we're living in now. More debt than ever. Higher interest rates, less room for error. Governments talk about sovereignty, markets talk about sustainability, and debt sits in the middle. Patient, powerful, unforgiving. So here's the unresolved question. If debt has replaced war as a tool of power, what happens when everyone is armed with it and no one can afford to pull the trigger? So, if this changed how you think about power, markets, or debt, subscribe for more. React, comment, because this war is quiet and understanding it is the only defense.